And hot diggity dog, you guys. Welcome back to the Invested Dawg. Emerson's Electric. They are impressive. A lot of people are saying to buy, but let's figure out if it is actually a buy or if we should be waiting and seeing how this stock performs. So Emerson Electric has become one of the most important industrial automation companies tied to modernization of their global infrastructure, of manufacturing, and of energy systems. So they have a lot going on. Later in the video, we're going to be talking about the revenue versus earnings and earnings per share and what the analysis recommendations are. But first on the list, let's go over to Simply Wall Street. And let's talk about what they like the most about Emerson's Electronic. So their ticket symbol is EMR, and they are about to be doing a 55-cent dividend. Of course, my laptop is freezing. Hold on, let's wait until it bounces back. You gotta love HP. You absolutely have to love HP computers. But while it bounces back, Emerson is a pretty impressive company. While many investors focus on those flashy tech companies, those flashy AI software companies, Emerson operates closer to the physical backbone of the economy through the industrial automation, through the economic level, through the control system level, the power technologies level, and through the processing of automation. So Emerson is one of the impressive stocks that I would say that is out on the stock market. Okay, finally, my computer wants to act right. So regular readers will know that this company, the Simply Wall Street, they love talking about this stock. They believe that this stock is definitely a winning stock. They think that one of the most important long-term themes surrounding Emerson is its exposure to industrial automation and the growing need for smarter infrastructure systems. Having earnings and dividends, have they been growing? Stocks in companies like generative sustainable earnings growth often make the best dividend perspectives, as it is easier to lift the dividends when earnings are rising. If earnings fall far enough, the company could be forced to cut its dividends. With that in mind, they encourage people to stand by and to do their own research and look and see what the heck is going on within each of the companies. Going on to the next stock, next article that they wrote, Simply Wall Street, Emerson's expands their AI software and partnerships as valuation signals remains mixed. In the other article, they talked about, hey, don't be so quick, but we still love this stock. It's definitely on the watch list. Emerson Electric expands its Nigel AI across its test software portfolio, adding more AI capabilities to industrial test and measurements workflow. They have a lot going on with all of the different AI sectors that they're trying to truly infiltrate into. As labor shortages and energy efficiency pressures and the supply chain is constantly not stable, they continue to grow within their sector, which I think is pretty impressive. Emerson's benefits from the trends tied to the AI-driven industrial monetization. Emerson also is entering a global partnership with L&T Technology Services to jointly develop and deliver I can't speak today. Engineering solutions using these software platforms. For investors following the industrial automation, Emerson's Electric sits at the intersection of factory equipment, process control, and increasing industrial software. And the latest AI-focused launches and updates indicates that the company is learning further into the software and data platform as customers look for tighter integration across production, across testing, across asset management, across it all. In sectors where many large players compete, they compete for the long-term plan and infrastructure contracts. These moves relate directly to how Emerson's position is going to be, how they're going to be contributing to the overall stock market and their performance. As of May 15th, they closed out at $133.05. It has been down a little bit. It was down for the 30-day also. However, they are spending their money in a precise way. They are thinking long term, and they're playing the long term game with how they are moving forward within the infrastructure, within the energy, within the AI sector. So let's go over and look at the revenue versus earnings. What I like about this chart is that, yes, it's been pretty consistent. Again, from an investor standpoint, Emerson's can appeal to those looking for exposure to the industrial and infrastructure modernization without relying entirely on the highly volatile technology stocks. So you can still get a little exposure without going crazy. Their year to date, yes, it's not as high as the S&P 500, but you still see a little growth. You are not losing money. For the 1-year return, you're up almost 13% compared to the S&P 500, which is, yes, 25%. And the 3-year return, you're up almost 70% compared to the S&P 500, which is almost 80%. 5-year return, you're up 53, almost 54% compared to the S&P 500, which would almost be 78%. Now, where we are right now with the stock price. The stock price is a little bit lower, on the lower side compared to where it should be, where the average price should be. But that's no problem. The company also has a long history of dividend payments, which makes it attractive to investors focused on cash flow and stability during the uncertain times of our economy. We are constantly at war. We are constantly having supply chain issues. Unlike speculatory growth companies that demand and that are trying to draw heavily from the market's uncertainty, in a sense, Emirates is not like that. This business is tied to real world industrial demand and long-term capability investment capital. So you're not going to be seeing massive dips up and massive dips down. The profit margin is a little bit over 13%. The market cap is closer to $79 billion. Enterprise value is $91 billion. So this is going to be a pretty safe stock, in my opinion. Let's go over here and look at the total cash margins. It's almost $2 billion. It's a pretty safe stock to be putting your money into with Emerson Electric, ticket symbol EMR. One thing that I do want to mention, as the power grids expand, manufacturing facilities, modernization, and government push, and everything involving infrastructure systems, companies like this, Emerson, may continue to benefit from the global shift towards automation, electrification, industrial efficiency. So this is a pretty decent stock to have in the portfolio. As always, you guys, this is the Invested Dawg signing off. Let me know what you guys think in the comments if you think that this is a smart stock to add into the portfolio.